Due diligence overview. This is actually extracted from an article that I actually wrote for the psdmagazine.com.au. It's called Profitable Small Developments Magazine, and it focuses primarily on property development. So in June 2014, last year, I actually contributed an article there, so they sent me a proof. That's what the article looked like. But what I've done from the article is that nobody likes to read that much, so what I've done is I've actually converted that article into a mind map, and I will go through that with you in this video. Warren Buffett once said, "It's better to be approximately right than to be precisely wrong," and this applies so much to due diligence that you've got to be at least approximately right when you're doing a due diligence and you're trying to zero in on a suburb or a property. So when you do your preliminary assessment, what are the questions that you got to ask yourself? The first one is, who will buy the end product? Am I going to target the owner-occupier market, the investor market, or I'm just going to hold it and rent it out to people? So you got to start with that and have answers to these questions. What's already being built in the neighborhood? Is it townhouses? Is it apartments, or is it single homes? What is happening in my neighborhood? So we've got to go out and find as much information as we can about what's currently happening in the neighborhood. Who are the builders operating in that area? It is always a good idea to find out. It's actually usually no more than 5-6 different builders who operate in a suburb or in a certain area. Usually builders, once they get used to an area, they actually operate within that area quite often, so that they know the council, they know all the other consultants involved in that area. So it becomes fairly easy and fairly straightforward when you're actually operating in the same area over and over again. So you've got to find out who are these builders who are actually in your area. What is the design intent in the local area? And this is determining what kind of townhouses or units are being designed in your area. So for example, you got to go and find out if it's a 2-bedroom townhouse or 2-bedroom apartment, or 3-bedroom townhouses are better preferred than 2-bedroom townhouses, or 3-bedroom townhouses give you better rental yield as compared to a 4-bedroom townhouse. These are the questions that you've got to ask for in your area. What is the demand for such designs in your area? So it's just back to supply and demand, and the way you can do that is actually go get in touch with the agent, ask them what's selling more, what are people looking for more, and they'll give you an idea, not only in terms of townhouses, apartments, or houses. They will also give you an idea of whether a 3-bedder is preferred, or whether they're looking for a powder room downstairs and an ensuite upstairs, or they want the ensuite downstairs and they want 2 other bedrooms upstairs. So that's the kind of stuff you want to find out when you're doing your preliminary assessment. What would be the end value of these townhouses and apartments? And you got to find out. You can call up agents. You can look at different resources. In my resource guide, I actually shared 10 different resources where you can get this data for free. So this is part of your due diligence when you start. What is the rent in the current market for a new townhouse versus an old property? So this is, again, when you're doing your due diligence, you want to find out if you are developing townhouses, you must know what are they renting for in that area as compared to an old house or a single house, or as compared to an apartment. So it just depends upon what you are developing, but you got to find out what are the different rental yields and what kind of return different kind of properties or different kind of products are actually getting in the market. What are some comparable sales in the area? Again, in my web resources video, I actually discuss about different websites that you can use to get all this data for free, or you can pick up the phone, call your local agents, find out what's selling for, how much are 3-bedroom townhouses selling, how much are 2-bedroom apartments selling, how much is a 4-bedroom house selling for in your area, what's the per square meter rate in your area. So these are the kind of questions that you've got to ask when you're doing your preliminary assessment or your preliminary due diligence. When you're conducting your due diligence, there are actually two different phases when you do your due diligence. First is pre-selection, and the next one is post-selection. When you're in your pre-selection phase, these are the three main things that you want to look at. The first one is location. The three main things that I look at when considering a potential site are: number one, public transport. Is the site close to trams, train station, bus stops, freeways, highways, etc.? Everyone needs to go to work, and most Australians still rely on public transport for a major part of their commute to work. The closer you are to a public transport location, or your site is closer to a train station, the quicker you will be able to sell it at the end of your development. So location counts. Not only that, you'll be able to put it on rent fairly quickly as well. I also look for schools and education facilities. Younger families prefer to live close to schools. Again, this could mean shorter days on the market when selling your new development, or townhouses, or apartments, whatever you've got. Shopping areas, activity center, shopping centers, they all fall under activity centers. Everyone needs to buy groceries. Everyone loves to go to shopping centers. So you've got to understand that if you are closer to a shopping center, not only you'll have a greater uplift in your capital gain, you will also be able to sell it quicker, and so on. So these are the three main things, because these three things for me help me basically mitigate a major risk, and which is that if towards the end it doesn't sell, or if it's taking longer time for it to sell, if I'm in a good location, I can still rent them out. So that's a big part of the risk that I use, that I mitigate that way. Time to walk away. Do not look for a development site in Whoop-Whoopville, basically out of nowhere, or in a location that's recently being developing. So unless you know what you're doing and you have had some experience under your belt. As a novice developer, don't try and be the first in an area. Council can hit you with a lot of unnecessary infrastructure upgrades, which can kill the deal. So this is like a caution that you've got to be careful of when selecting location. Demographics. Determine the population and future growth of the area. Find out the age group of various households. Most importantly, does the suburb mostly consist of owner-occupied properties, or is investor driven? Very, very important. You must understand who's in that area. Time to walk away. If during your due diligence you find that the suburb consists mainly of investment properties, that is, not a lot of owners live there themselves, stay clear. This has happened many times with mining towns. If for some reason you see a decline in population in a suburb over the past years, find out the reason why before you invest in that suburb. Gap analysis is basically the difference between demand and supply. So what it is that it actually helps you determine the gap between the demand and supply, and it's done by determining household growth, income, affordability, comparing renters versus buyers, and you can determine the demand in a particular area, and then you compare this data with the council's pipeline data for development applications to make sure that, okay, that's the current demand and that's the pipeline, that's the development pipeline with respect to all the applications that are already in council. And then you can say, okay, whether or not this area actually needs this kind of development. Gap analysis process. If you wanted to understand what the gap analysis process is, it starts by gathering data, and you can use ABS population, ABS income, and sales records, and the development pipeline. That's where you get all your data. And in the course I explain all these resources where you can get all this data. Demand analysis, you do analysis of household growth, household income, housing affordability, renter versus buyer, and disaggregate growth. Supply analysis, you identify demolition, you identify construction, and you determine net supply. And then you measure the gap, which is demand less supply, and you review historical sales data and fit product to conditions. So depending upon what's more in demand, for example, whether it's apartments or townhouses, that's what you actually develop in that area. Time to walk away. If your demand is low and you see a huge list of development applications on your council's website, it's time to walk away. You come across a site for sale with plans and permits for 2-bedroom townhouses, and your gap analysis shows that the demand is for 3-bedroom townhouses as the suburb is dominated with young families. It's the wrong product fit for that market, and it's time to walk away. So these are the three important things that you've got to consider in your due diligence process. And we go into a lot more detail than this, but this is just an overview for you to get an understanding of what's involved in the pre-selection process. Post-selection, there are 4 major things that should become part of your due diligence process. Determining highest best possible use, understanding the physical characteristics, determining the land value, and legals. Highest best possible use, it's about maximizing the development capacity of land or property while playing under the rules of res code, zoning, and overlays. Determining what the number of units, townhouses, apartments you can fit on a block of land in order to make the development viable. Time to walk away. Don't become adamant about pushing boundaries with council. That's a big no-no, because just because your feasibility does not show a profit with 4 townhouses, don't try and squeeze in a 5th one. It would only delay your application, and you could end up in VCAT in Victoria, or you'll end up waiting for your planning permit for eternity. So it could be delays, and all these things happen when you try and squeeze in more than what the res codes would actually allow. Physical characteristics are all about zonings and overlays. Is your proposed site correctly zoned? Usually for residential developments, you ideally want your site to have residential zoning. Examining restrictive overlays is extremely important. Some overlays are pro-development and can mean smooth sailing for your planning permit application. Size, is the size enough to accommodate 4 townhouses or apartments, or how many? Frontage, is the frontage wide enough for your development? You may have a fairly large site with a narrow frontage, making it unsuitable for your proposed development. Site contours is basically a slopes in the site. If the site's got if it's a very sloping site, that could mean more construction costs in terms of retaining walls, in terms of site cut and fill, in order to level the site, which would blow the budget out of the water. Flooding or bushfire zones, is the site affected by flooding, or does it fall under a bushfire zone? If you're in Queensland, there's a thing called overland flow, and you got to make sure that your site doesn't fall under any of these zones, and that, because that will have an effect on your yield, and it may stall or hinder the development of your site. Local authority, is the local council supportive of the proposed development? Have a preliminary meeting with your council's town planning department to gauge their attitude towards the proposed development. Time to walk away. Well, there's a thing called VPO, which is the Vegetation Protection Overlay. If your site has lots of trees and falls under the VPO, Vegetation Protection Overlay, and you cannot put your desired dwellings without knocking the trees down, walk away, because council may not permit you to get rid of the tree, which basically means you might not be able to build to what you are planning to build. because there might be tree protection zones where the council might not allow you to have a habitable space overlapping that. So there are all sorts of issues with that. Site history, research into the previous use of the site. For example, ask yourself, depending upon various use of the site, could the site have asbestos buried under the soil, or depending upon previous use, could the soil be contaminated in any way? For example, petrol, an old ex-petrol station site is a classic example of that. If the answer is yes, you either walk away or investigate further and find out how you can decontaminate the soil, and do your numbers based on based on what it's going to cost you to actually decontaminate the site. Now, land value, this is very, very important. Land value is a crucial component when conducting a financial feasibility. Usually everything remains constant, including professional fees, construction value, permit fees, selling costs, and so on. The only variable in a feasibility study are land and the end sale value. Just because you paid more for the land does not mean that you can get more for your developed product. So let me give you an example in this scenario. Let's say you are considering buying a land to develop 4 3-bedroom townhouses. You have determined that they sell for $530,000 in your area. However, the vendor is asking for $600,000 for his land, which pushes the price of land to $150,000 for each townhouse. Now, if you do your numbers right, you will notice that in order to allow for all costs and for you to make a profit on this deal, you really need to sell these townhouses at $575,000. However, the market does not allow that, as the current value sits at around $530,000 for your townhouses. In essence, you should be paying only $120,000 per townhouse for land to make your margins, which justify the end sale value of $530,000. If that's what's the case is, and you are being pushed into paying more for the land, you got to walk away, because there's no way you'll be able to make any profit on this deal. One of the last things in due diligence is legals. This is where you hire a professional lawyer, conveyancer to help you out. They particularly look into Section 32 or disclosure statement, and they find out the security deeds or caveats on land. They conduct property searches, boundary line or party wall arrangements, and other restrictive covenants on the site. Usually, even before you go to a lawyer, an agent will flick you a copy of the disclosure statement or the Section 32. Time to walk away. If you find covenants on your site, in your Section 32 or disclosure statement, for example, a single dwelling covenant, very common on big blocks of lands. A lot of people think that, oh, I'll buy this big block of land and build 10 townhouses. Apparently, it turns out you can only build 2. And then you are stuck with it because it doesn't stack up. So you make sure that you find out all these restrictive covenants that you have on the property. The covenant could be anything. For example, one of the properties that I own has a covenant of the dwelling type that can be built on it. For example, it can only be a brick veneer construction. Anything else, weatherboard or plain rendering, is not allowed in that area. So these are the things that you should know before you get into. I'm not saying that they would be wrong all the time, but you should know about them before you actually get into a project. So that's the due diligence overview. I hope you understand the various things that you got to look at and the various questions that you got to answer and must answer before you actually get into a deal. Great, let's look at some of these important web resources that every investor must know about, especially when they are trying to find deals, when they are trying to do their due diligence, when they're trying to gather data to make an informed decision. So let's look at what these are. So these are the 10 web resources for property investors, and I wanted to walk you through these resources and how you can best get data and information from these resources. The first one is the Australian property monitors. I like them because they've got a lot of data, and I like them for the fact because a lot of banks actually use Australian property monitors APM model for their desktop valuations, just to get a quick idea of what they are. So this URL domain heads domain must heads homepriceguide.com.au. It gives you a national market snapshot. I like it for the following reasons, and one of the reasons is it reports national auction clearance rates, so that I know where the market is going in one hit. It lists faster growing suburbs, reports on median property trends. You can search for a specific property and find out about comparable sales in the area, and also reports on record prices paid in that suburb. So let's look at this this resource. I've got that open here, and we can quickly have a look at it. So over here, if you look at the market snapshot, it gives you what is the auction clearance rate happening, what is the ACR nationally. Then you can click on the metropolitan cities. You can click on Sydney, Melbourne, Brisbane, Adelaide, and it'll tell you where they are at. So if you see Melbourne, it was going from April to May, it was going a little bit slow, but again it's picked up at this point in time. Also, it gives you the fastest growing suburbs in Melbourne. It talks about South Melbourne, Middle Park, Prahran, and which are these suburbs that are actually doing really well. Another thing you can do is actually download this data. Now this is all free stuff that you would need if you were to research sales by suburb, or gather data that's available for free. Everything else you got to pay for these days, but I just wanted you to get these resources so you can gather all this data for free. So this has all the sales by suburb, and once upon a time I used to religiously download them, because whenever I was doing numbers or running feasibilities or doing my due diligence, I would refer back to them and go to, okay, Essendon, that's what I'm looking at, what were the sales for 3 bedders, 2 bedders, and that's the data that you can get from this website, and this is all available for free. What you can do is also put in an address here, and when you put in the address, it actually takes you to property research for so for example, all I did was I put in that address. So this particular address is 332 Gallagher's Road in Glen Waverley, and it'll give me an idea of what is it selling for in that area. It gives me an idea of the recent searches. So 332 Gallagher's Road sold for 1.1 mil, and it's a 5-bedroom house, and that gives me an idea of what everything is at in that suburb. You can click on past sale records and you can get more details. And these, look, because this is all free, it's not in that much detail, but the 10 resources that I discussed with you, you'll be able to get a lot of data for free without actually paying for it. So if you click on 12-month or 24-month, they will ask you to pay for it. If you must pay for them, you can pay for them and get these reports. I've actually never bought any of these reports, but you can obviously. Heat maps, I really like this feature because it quickly tells me, I don't know why it's not loading completely. Just refresh the page and see what happens. So if I was to click on heat map, okay, it's loading now. You could quickly have a look at it, zoom out, put your finger on it, and when you click on it, it will show you what the year-on-year change has been, numbers sold, annual compound growth over the last 3 years and last 5 years, and so on. So this kind of data is very important. Now you might look at it and say, oh, 4% and all that, but I actually, in my course, I teach people how you can pick up these numbers, put them in a calculator, and predict the growth trend in future, so that you know exactly if you are doing a development in a certain area, or if you are buying a property in a certain area, you know what the actual growth trend is going to be, and you can extrapolate it to show if you put the money in, by what time can you expect the money to double. So in the course you actually get in the property development system, you actually get a calculator that you can use, and you can pick up this data and use it in there. It also talks about demographics, which is no different from what we get from Australian Bureau of Statistics, from ABS. So this is a website that I use quite often to understand and get a snapshot of where the auction clearance rate is at. And Brisbane, it shows a little bit lower. The reason is that Brisbane auctions are not very common. Auctions are a thing of Melbourne and Sydney, so auctions are very common in Melbourne and Sydney. So and ACR is not really the only indicator, because only 40% or 42% of the properties actually end up in auction, and most of them are still sold via private sale. So they can't be the real indicator of where the market is at. But it's a good idea to keep an eye on them, and you can download auction clearance results every week from this website. Another absolutely brilliant resource that I use very often to gather data and gather market intelligence is this website called propertyreporter.com.au, and it gives me all sorts of data. It's really useful. I bet most of the people watching this video didn't know about it, although these websites are free, but not a lot of people know about that, or even visit these websites to gather this market know-how and information. So let's look at what the site has. This site here, I just absolutely love this site. So I've actually stuck with our example in Glen Waverley. The first thing that you can actually put in the postcode, suburb, and it just spits out everything. You can select the state. You can put your reports, price per bedroom, where to buy, rental yields, discounted listing, trends, hotspots. This is just amazing. Not a lot of people know about it. You can even set up alerts that they can send you if your details match a certain criteria. So you'll have to create an account first, and I'll let you play around with that. But let me show you what it already has. It gives you sales history. How good is that? Every website that you go to, for them to give you the sales history, they want you to pay something. But if you go here and you've got all sorts of filters. For example, all I want to see is find out, okay, what is the townhouse happening, which is what are the prices for townhouses in Glen Waverley, 3+ bedrooms, filtered list, and it filters that list and tells me what they are going for. So I already know that, okay, these townhouses in Glen Waverley, it tells you the sold date. But yes, some of the details are undisclosed, maybe because the agent hasn't reported or not. But these will be undisclosed no matter where you buy them from. If you end up paying for this report, it'll still list it as undisclosed. And the reason for that is that either the agent hasn't reported these details, or the vendor requested those details not to be revealed. So they've got privacy acts that this data sometimes is unavailable. So no, apart from that, you can go and look for sale. What is for sale and for how much? And you can select, okay, I'm looking for an apartment, I'm looking for a 2-bedroom apartment, 1 bathroom plus, filter the list, and it'll tell me, okay, how much these apartments on this street, 673 High Street Road, there's a 3-bedroom apartment going for 780,000. So if you want to research about rental properties, so say for example you're developing a townhouse and you know that they're going to be 3-bedroom, for your own feasibility and making sure that you've got more details, you can filter these results and you can find out, okay, so this is like getting a rental appraisal. Now you can get a letter from an agent. Usually if you're lending, and the banks would want a letter from an agent, but for your own feasibility, you can actually find out how would you be able to actually rent them and how much you'll be able to charge for them. So this is all free, folks, absolutely 100% free. You can filter a report and you can put in, okay, I want to find out about Victoria, number of bedrooms, 3, submit, and it'll give you the report of all these details. So in what suburb, postcode, and you can drill down on these suburbs and go further and get that report. So have a play around with this website. Really amazing resource. I use it all the time, and I'm sure you'll find it useful. The third resource in this series is sqmsearch. I'm sure you must have heard of that. It's a major research company, and they've got their own website, and they've got all sorts of paid and free resources and data available that you can use. The reason I like them is because of the few things that I use. For example, implied gross rental yield. What this tells me, and it helps me determine, is that if you look at the implied gross rental yield for 2-bedroom unit, and it's somewhere close to 5.8 or 5.7%, somewhere here, which has gone down. And then I've got this red one, which is implied gross rental yield for units. So if I was to develop here or invest in a property here, I obviously wouldn't be buying a 3-bedroom house here, because I won't be getting as much yield as I would be if I was to get a unit in this area. So that helps me determine what kind of investment should I be doing in a suburb. So I've continued with the same postcode 3150, which is Glen Waverley, and so that we've got a consistency throughout all the examples that we are discussing. So you can put in your details or your suburb postcode over here and get this information, because that's free. That's free information that tells you, if you are going to start investing in an area, what should you be investing in so that you get the maximum details. So this would be your starting point. This is when you are looking at a wider area, and then you are narrowing down to a suburb, and then you are narrowing down to streets and so on. So this is like a broader overview for you to begin with. Another thing this website has is the sold prices for 3150. So if you see postcode 3150, it's going anywhere between from 2,000, it's gone up to $9,000 per square meter. That's how high it's actually gone. And you can actually click on last 12 months, what's happening in the last 12 months. In the last 12 months, that has been the graph, and if you wanted to compare that to 2013, you could, and you could see that how it had actually gone below the Eastern Melbourne area. So that's another piece of information that you can get from this website. You can also get weekly vendor sentiment, and it's really good, because everything, our markets, our share market, our property market, they're all dependent upon the confidence people have in the market. And media does a really good job by saying, oh, market's going to crash, or this is going to do, but this is actually the media drumming up this. It's actually, sometimes I feel that it's actually the media that causes a crash in the market, because they are so negative, and negative news sells. So I like this portion, because in this little table, it quickly tells me the 12-month change in that area for all houses. It's gone up 12% in 12 months, but look at over 3 years, it's gone over 22.9%. If you look at 3-bedroom houses, they've gone up by 30% over the last 3 years. So that's what you got to understand. Units, because there are more people getting in the market, so they were actually going down. It all depends upon the supply and demand in that area. Lastly, what I look for in this site is the residential vacancy rates, just to get a quick idea of where it is at. So it's at 1.7% at the moment, and you can quickly look at what was the number of properties vacant in month of January 2013, 14, 15, and so on. So I think it goes 6 monthly. So 6 monthly it'll report what they were. So see how it's actually gone down. So at the moment there's not a lot of properties vacant in this area. Another gem in this resource guide is subeducatecom. Fantastic, absolutely brilliant website. Not a lot of people know about it, and that's the reason it's actually in my resource guide, because not a lot of people use it. What you can do with this website is got all sorts of heat maps. So no matter what state you're in, you just click on it. And you can zoom into it and find out more details. So let's just zoom into and continue with our example that we had earlier. So we've got, let's say that's the area that we were looking at. So if I click on it, it'll go and take me to another map, and it shows me all sorts of vacancy rates in this area. So for example, Mount Waverly at the moment is 0.75, then you've got 0.68. Anything red is something that you don't want to get into or develop, or almost immediately, because that tells me that there's a bit of stock on the market. That's why they've got vacancy rates in this area. Anything in this yellow is fairly safe. For example, Dingley Village, it's 0.18%. So if you were doing a development in Dingley Village at this stage, it could help you. So it could help you in the sense that it would go on the market fairly quickly, and you should be able to rent it fairly quickly as well. So you can look at all these little tabs. It talks about price reductions, for example. So if you're looking at southeast, we're looking at southeastern suburbs, or you can put in your address, or you put in your suburb name, and it gives you all the properties with prices that have actually gone down. And for example, look at this, it's in Cranbourne, it's 10% 23 days ago. It's been on the market for 100 days. So these things can actually really make you an astute investor, because they tell you exactly where to grab the bargains from. So and if you had an address here, it will give you details about everything around your address. Median rent, you can again hover over that and you'll know exactly what that in an instant. So very, very good website. I use it all the time. Well, the reason it's actually here is because I use them all the time, and I wanted to share these resources with you. Another website that I use quite often is boomapp.com.au. Really good site if you just want to find out some important stats for an area fairly quickly. For example, I just put in Glen Waverley and it tells me houses, Victoria 3150, and it gives me a DSR score, which is the demand and supply ratio score. So if I wanted to find out more details, I click on suburb stats, and it takes me to this page which talks about the typical value, days on the market, vendor discounting. Auction clearance rate is 86% in this area, so if something goes on auction in this area, it sells fairly quickly. Rental yield is low. Why? Because the capital growth has been so much, that's why the rental yield is low, and it's mainly an owner-occupied area. Online search interest, vacancy rate, and so on. Apart from looking at all these stats, all these different stats for each suburb, you can also use this site to quickly shortlist some hotspots. So when you click on Hotspot Finder, you can select the state you want to look at. So you can narrow down the typical values, so say 480 to say, let's say 840, and you can click the score range. You want the DSR score range to be between 25 to 40, and you click continue, and then it takes you to another page and lists everything that's going hot in that area in terms of the demand and supply. So you know that Dingley Village, Kilsyth, and remember how Dingley Village popped up here, because in the previous video we discussed that Dingley Village had a really low vacancy rate. So obviously the demand's more high in Dingley Village at this stage. So you've got Heathmont, Montrose, Mulgrave, Vermont, Bayswater, and so on. So that gives you a really good idea of where you should start looking for your project. And I'm not saying that you have to go in Ferny Creek, for example. You don't, because I actually follow a different pattern which I discuss in the course, how to find your next deal. Property Observer, this is a purely new site for property. If you wanted to keep an eye on the market and find out what's happening in terms of tax related to property, in terms of anything, any new developments or any kind of news related to property, this is the site to keep an eye on. I like this site, except for the fact that this site has this annoying pop-up that every time you go on the site, it asks you to put in the details to get the basically to capture your email address and so on. So this has all kinds of articles that you can look at, finding residential investment, location and forward planning and so on. Some of these articles are actually written by some of the experts in the industry, and they are not necessarily right, in the sense they are also part of their opinion, but it's good to keep an eye on this if you want to keep an eye on the market, or especially property market in Australia. I refer to this site a few times just to read articles and keep up to date about property news. housedata.com.au, I only use this site to find out details about different planning alerts. So if I click on planning alerts and I put in my details about the suburb, it actually gives me a list of all the different planning applications that are in council at the moment. And that's actually a good, especially if you are trying to determine the development pipeline and determine the supply and demand for whether or not by the time your development comes on the market, how many other developments would come on the market. So to be able to gather that data, this is a good website that I use quite a lot. Sales data from China. If you don't have access to a paid site or a paid resource, this site would give you all the sales data for free. A really good site. If you can't afford to get sales data by paying to different sites, this is the site you get it for free. It's actually house.ksou, I don't know what that stands for, .cn, which I believe stands for China, and you can have a look at all rental yield, growth rates, in-depth suburb data, accurate and up-to-date free sales data is available on this website. So let's look at this site in more detail. As you can see, when you get onto this site, you've got Melbourne auction clearance rate. You've got details about auction clearance rates here. You type in the name of the suburb, and you've got details that come up. Search sold price. Sometimes I've found that even if I can't find the sold data on realestate.com.au, that data is actually available here, which is really good. This is what I was talking about when I say the media actually kills it. So what they're doing is trying to scare people off. Recession begins 2015. Yeah, new report reveals it all. It is such a BS, and it's actually designed to target people who don't know much about the market, because if you click on it, it'll take you somewhere, ask for your details and so on. So let's just leave that out for the time being and look at what this site has to offer. I have used this site on many occasions because all this data, I can put in the address here and it'll give me the sold price in that area. So I know for sure that this data is pretty accurate, and so many times the sale price wasn't available, the sold price wasn't available on the major websites, but on this site that sold price was available. So it's a good website that I use, and it's absolutely 100% free. So you can find out all this data from these sites. You can click on rent price, search what everything is being rented for, and you've got property report, and schools in a particular suburb, and so on. So you can play around with this site and find all this sales data for free on this website. onthehouse.com.au is a very popular website, very common in search results, but I bet you didn't know what you could use it for. The only website that actually gives you the land size for free is onthehouse.com.au, and that's the only. If I ever wanted to find out how big a block was, there's no website, realestate.com.au or anywhere, unless the agent actually specified what the block size was. But if it was something, if you were looking at a property that was off the market and you wanted to find out what the land size was, you can either pay to websites like Price Finder or Real Estate Investor and get a subscription off them, which is the paid subscription, to find out what the land size is. Or you can go to this website quickly, instantly, and find out what the land size is. And that's what I use it for. And it also has a guesstimate value, like a desktop valuation. But I found this site to be really, really off, almost 9 out of 10 times in terms of a guesstimate value. And they say that it's a guesstimate, so that's what it is. So if you were to go on onthehouse.com.au, you put in the address, you press the search button, and it takes you to this page where you can look at what this size was. Now, in the listing, if it is available, yes, of course, you'll be able to find that in a listing. But if it was a property that wasn't listed on the market, this site will still give you the land size on this. And I've used this site many times just to find out what the land size is of a block that's not on the market as yet. There are other ways to figure out what the land size is, and I discuss these details in my course. But if you want a free resource to get a guesstimate and the land size, this is the site that I use. The last one in the series is investsmart.com.au/property. I like this site because it gives me a report on top performing suburbs, worst performing suburbs, and the report on 12-month and 24-month growth by suburb. A lot of people, this data wouldn't make any sense, but if you were to use this data to your advantage and you knew how to use this data, that tells you how you can make decisions, your investment decisions and your development decisions. This site is really good. So let's look at this website, investsmart.com.au/property. So if you look at top performing suburbs by 12-month growth, and it gives you a list of all the suburbs that are the top performing, and that's nationwide. Again, worst performing suburbs by 12-month growth, then it gives you all the suburbs that haven't performed that well over the last 12 months. If you know the postcode of a suburb, you can click on it, click the search button, and it'll give you what that suburb has. The 12-month growth has been 13%, but over the 24-month growth it's gone down 1%, and so on. So if you click on something, you can have a look at the median price of a house, and the median price looks like this is an apartment, and you've got all sorts of heat maps that you can use to figure out all these details and gain market information.